We do expect that the government will take steps to recapitalize many of the banks. They have been already having talks regarding consolidation, and that, of course, they have already told the banks to examine it. So that combined with the recapitalization should ensure that the banks come out of the problems they have. As you know, the banks have been facing only the stress assets issue. I think the bottom is almost there. So in fact, there is a very excellent opportunity for the J curve to start. And with a little bit of capital, the banks can start lending more. And then that should automatically result in additional flows. So it's a question of excellent time for them to put in some good money. And I think they'll get the returns within 3 years. And all the banks should become very strong. So the government, they will probably sell a lot of their own assets in other institutions, other public sector units, and should be in a position to capitalize the banks.
That's exactly what I was going to come to. We know what has been budgeted for bank recapitalization, but is anything needed over and above that? You think it's going to be from the disinvestment proceeds?
It is essential that they have to raise additional funding because, as you know, the requirements of capital has gone up considerably.
How much do you think is needed?
I would say upwards of 100,000.
1 lakh crore, more than what has already been budgeted, over and above?
No, I would say totally around 100,000 crores.
1 lakh crore.
Minimum of 100,000 crores will ensure that the banks are in a position to meet the requirements and start lending.
But banks...
Simultaneously, we have also taken up the matter with the Reserve Bank of India to give some leeway about the provisioning. If that leeway also comes, I think combined with that, I think we will be in a position to meet the requirements and go ahead with a lot of lending which is possible.
Have you got any positive feedback from the RBI on this?
We have had some interaction with them, and I won't say they have said no, but I think they will be looking into it.
Okay, that's a big headline. They're going to be looking at relaxing provisioning.
They are looking at it. I'm not saying that they're going to be positive. They have not confirmed that they'll be doing it, but we have time and again said that it's not possible for us to provide it in one quarter. Let's provide it over a period of quarters. In that way, the banks will be in a position to ensure that they are meeting the capital requirements. The government also in a position to bring in the capital, and that way the entire thing is spread over 1.5 years. If that spread is allowed, I think all the banks will come out of it.
What about the capital adequacy norms? Do you think that could also be loosened to give credit offtake a chance?
No, I don't. See, they will ensure that the Basel Committee requirements are met. I don't think so. They are going to relax on that. However, there's one more thing which is going to loom is the IFRS implementation. There we expect the Reserve Bank of India to be a bit more lenient and ensure that the additional requirements on account of IFRS may be spread or may not be immediately implemented.
So I'm just going to come back to the bank recap. I wanted to get your thoughts on just not just quantitative bank recapitalization, but also qualitative. We do understand that back in India, that is what North Block is keen on, that a bank must earn the right to get that check from the central exchequer. They must work constantly on improving their quarterly results, their own numbers, etc. Do you agree with that? And are you seeing that happening?
No, I think the banks have already started on that, and they have made different steps. They have also had an interaction with the unions and the association how to improve their efficiency. And with this digital push, I think the costs have also come down. So that will all come in their way, in their favor. However, without additional capital, they may not be in a position to lend more. Today, all the banks are flush with funds, and they have also reduced the interest rates both on the deposits as also in savings bank, you must have seen. So that will also give them additional elbow room. But without the capital, additional lending may be handicapped, and therefore it's necessary. If they are in a position to show that even without that they are in a position to make break even, I think that will be an incentive enough for the government to push in more money.
And when you're asking the RBI to relax the provisioning, what are you saying, from 1 quarter, make it 3 quarters, or what is it?
See, what happened is, if you've seen, the Reserve Bank of India has recommended 41 cases to be referred to NCLT after resolution, in case the resolution doesn't work out.
Yeah.
In the case of the 12 cases, they have already directed us to go to the banks to go to the NCLT. But the provisions there additional are much lower, because most of them are in a higher level of provisioning, therefore it's not much. Whereas in the second list which has come, it's quite possible almost all the cases may have to be referred to NCLT due to certain reasons. And if that is the case, the provisioning is going to be huge. What we have requested the Reserve Bank of India is to examine the possibility of these additional provisions to be made not in the next 3 quarters, but over a period of 7 quarters or 11 quarters, so that there is some elbow room for them to lend as also go ahead.
And are we actually going to see mergers taking place? Are you seeing, do you know if banks are actually interested?
As of now, we have not had any formal communication from any of the banks about the merger. But I am told that discussions have taken place in the various boardrooms and what are the possibilities and whether it is worthwhile to go right now or later. So there are discussions because I have had interaction with a few CEOs and a few chairmen of banks, and they have all been saying that discussions have been initiated at the board, but nothing concrete.